Brian, what are you plugging in terms of your expectation for an oil price? OPEC is going to give us some news tomorrow. How important is that? Where do you expect the oil price to go in the United States? We're obviously watching what the Biden administration is going to do. I'm just curious as to the kind of big top-down macro drivers impacting this sector.
Yeah, look, we think we could see oil prices into the 60s, WTI later this year, and stick there in 2022. And so when we plug that in, our estimates for EBITDA are about 13 to 15% above consensus. And we think, again, that can be a tailwind given some of the skepticism on the sustainability of this oil price move that we've seen. One of the questions is going to be, how do some of the producers that we cover respond? Because there is a lot of focus on capital discipline. Our view is that we are going to see that stick, but there's a lot of investor skepticism on that. And that's because down cycle discipline is easy, but up cycle discipline is harder. And investors are going to be watching, I think, these companies very, very closely as we go through not only this quarterly earnings season, but the next couple to make sure that discipline holds, because that would support not only the higher oil price that we're forecasting, but also strong free cash flow yields.
All right, two questions for you. The first one, Brian, is we had a list of your top picks, and it was like Devon and EOG, and those names do have exposure to federal lands. You can make an argument that you won't really feel that in terms of their inventory for a couple more years because they already have their leases and permits. But how do you model that kind of potential risk over the next couple of years?
It's a great question, and we've tried to look and say if there are no additional permits that are issued on the existing leases, then what is the lost value, and then where do the stocks trade today relative to that value? And given the underlying tailwinds of the commodity price view that we've talked about here, we still see value for the Devons and the EOGs and the Cimarexes of the world, which are three stocks that we like. But we understand that people want to build a portfolio, and there are stocks that we also like that don't have exposure to federal land, like Pioneer Natural Resources. So, this is one of four overhangs on stocks, along with short-term demand concerns, long-term demand concerns, and capital discipline. We do think we're going to get some greater clarity on this, but we certainly understand it's a risk, including some of the stocks that we like.